there everyone, and welcome to this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances and you need to decide for yourself whether it's appropriate to you. Okay, so our market closed fairly flat today. We've spent pretty much 3 days sideways now. But last week we did break through a couple of key levels. Okay, so straight after Easter we got through the 68.50 and then through that 69.36 level as well. Now the two key levels that we need to see this market break to confirm continuation. So we've got that continuation pattern in now, and we're just stuck here at the 7,000. It was a fairly big move, really, considering the volatility we've seen recently, which has been pretty low. So at this point, yeah, it looks like we're going to take a breather around these levels. We could pull back the trend, we may not. Really just back in no man's land in the short term. But I do now have a strong inkling we're going to head back up near this 72 all-time high. I did put out there, I've been saying it for the last 6 months that I believe that we're going to go to at least 7,200 in the first quarter of this year. Well, yeah, we've passed the first quarter, but nonetheless, my timing might be a little bit off, but we're still going to head back up there again. It's just a matter of when, okay? And I do believe that there's a high chance of it really happening in the next sort of 4 weeks. Typical cyclical pattern for our market is sideways through March, a kick up through April into May, and then a decent pullback at some point in May, right? So I believe we'll have that next kick up, probably up to about 72, and then we'll pull back to around trend or back to that key level through here at 666, 66.50, something around this key support level that I have drawn in down here. It seems to be an absolute magnet for our market, so I wouldn't be surprised to see that level tested again at some point through May into June. That's just cyclical, right? That doesn't play out every time, doesn't play out every year. What we look for is signals to prove that could play out and place trades based around that. So that's our market at the moment, just back sort of sideways short term, looking for that next breakthrough. S&P 500 that keeps creeping higher and higher and higher into blue skies, and that's now got a combination of both growth and value helping it push higher. This week is a big week for the US markets, so keep an eye out over the next few sessions, or really right up through to Friday, of what the mood's going to be as we start getting hit with a bunch of information. But short term they're looking a bit overbought. Wouldn't be surprised to either see them just drift sideways here for a little bit or have a small pullback soon. Hard to say really, but ultimately we're bullish, right? We think there's plenty more in this, plenty more to come in the medium term. Let's go through some of the reasons why. Obviously stimulus, okay, that's the big thing here. We've got another round of stimulus coming from the Biden administration. This time it's less of COVID aid and more of an infrastructure spend. This is more designed to get inflation back in. It's more designed to get the economy up and running and really boost and push it forward. Get that engine running again. That's what we want to see. Alright, so look, that's going to play out. We need to keep an eye on the devil's in the detail here. In particularly, you're going to keep an eye on how they're going to fund this. They're talking about corporate tax increases. They're talking about a minimum global tax for certain spaces, certain companies. And look, it's going to affect some companies more than others. Okay, morely, look at a lot of your tech companies and companies that deal predominantly overseas as well as in the US, that find sneaky ways to get away with paying the full tax. They're the target, right? They've had a target on them for a long time, and whether they're going to finally find a way of getting more tax revenue from those companies or not, that's the big question mark, right? So that could have a negative effect to some stocks on the market. So keep an eye on this space. It is an important space. I don't think the market's fully digested this news yet, or are fully aware of what this looks like moving forward. So we're not informed, right? We really don't know the devil behind the detail yet, and that's what we're waiting for here. Okay, so then vaccine rollouts in the US are still going fairly well. Obviously, it's a bit of a debacle here in Australia, as the AstraZeneca CSL vaccine is now no longer going to be given to anyone under 50 because of the risks of blood clots. So obviously now we don't have a clear path forward in Australia for the vaccine rollout. That will affect sentiment. That will affect the sentiment, especially around travel stocks and things like that. So, it's an interesting concept because it's always a balance between shutdowns and COVID and vaccine rollout. Well, we don't really have that shutdown or anything at the moment. We're not in lockdown anywhere. We have the virus under control for the moment. The problem with this uncertainty around the vaccine rollout is that any sort of increase in COVID cases here in Australia might have a fairly big negative effect on certain sectors of the market, where before there was a cushioning because of the vaccine rollout and a clear path forward on vaccine. We don't have that clear path here in Australia. In the US is a little bit different, and this is what some of the reasons why we're disconnected from the US a bit. The US has got more stimulus in the pipe. They've got a good vaccine rollout, and their recovery path has got a clear light at the end of the tunnel. Here in Australia, it's a little bit different in that we've had the rollback of keepers and seekers allowance. We're in a different phase of stimulus now. We don't have any more stimulus coming that we're aware of. Only thing we have got is a very accommodative central bank, and obviously the last year's budget where they revealed our infrastructure spending, that is still going to play out over the next year or so. But there's no new stimulus in the pipe, right? And now we don't have a vaccine rollout either, so there's a bit of uncertainty here, okay? And that's where our market could hold back a touch as well. So, but the big thing for the US markets this week, two things. One's going to be US earnings season that kicks off tonight with Fastenal. Then you're going to have the US banks tomorrow night that are going to really help direct, especially Macquarie Bank here, but it will affect the mood around our banks a little bit too. So just keep an eye on the bank reporting, guys. It's probably a critical part of how we view the overall value space in the US. We'll keep an eye on that space, guys, okay, this week. That could affect the mood. The other big thing is inflation numbers tonight from the US. That could very easily put a bit of fear on if inflation comes in higher than expected, all right? So that's a big one, right? Everybody's a bit scared of inflation right now. We know inflation's coming, guys. For me, look, longer term, it's a positive thing until interest rates go up too quickly, okay? If interest rates get flagged to go up slowly, look, that's fine, right? There's actually nothing wrong with that. But what everybody's worried about is if they stimulate too much and we get hyperinflation, they're going to have to increase interest rates too quickly. And if they do that, obviously that's going to harm a lot of investment. That's going to slow things down too quickly, and you'll get a very quick run for the door in the stock market, right? We'll see a stock market crash if anybody thinks that inflation is going to go up too quickly. So just be wary of that, guys, okay? Inflation's a big focus. The focus on inflation could sort of, simmer away, I guess. I think people might eventually get used to the fact that inflation's going to go up. But for now, I think it's a big talking point, and people are still wrapping their head around it. It's causing uncertainty, and markets don't like uncertainty. The next big thing really is China. We've seen a lot of volatility around the Asian markets at the moment. We're still seeing a bit of tensions obviously brewing in the background between US allies and China. We don't know where that's going to head, guys. The last we heard was talks of a potential boycott of the Winter Olympics. The other thing with China is obviously because they've seen stronger growth, they're going to start paring back stimulus. They're becoming a little bit more hawkish over there, and that has their market really banging around sideways a bit more. It's seeing a little bit more volatility compared to the US market that continues to slowly climb higher on the back of more stimulus hopes. So China's, there's a few things simmering around in the background there that might cause us in Australia a few problems because we are a major exporter out to China, especially through our miners. I suspect that's one of the reasons why our miners have been a little bit volatile of recent. I'll just probably wrap things up with, at this point in time, guys, markets this year at this point have everything they want, right? Especially for the US markets, there's plenty of stimulus being splashed around. Central banks can't get much more accommodative than this. So at this point in time, guys, I kind of have to be bullish, right? At some point, this bubble will burst. We all know that. We all talk about it. But for the moment, right now, I can't see that bursting. I still feel there's a lot more in this move over the next 12 months or so before we see the bubble burst. Now, in saying that, there's always a 10% correction around the corner. And May, well, more times than not, in May, you get pretty much a correction. All right. So look, there could be one around the corner, guys. Okay, I'll start worrying about that a bit more once we get into May, and obviously always looking for signs of what could cause that next big pullback. But really, for me, 10% corrections on the table for the S&P 500 at some point in the next few months. Okay, I know that risk is there, and just looking for signs of whether that's going to play out or not. Okay, so all right, I'll leave you there. Thanks for tuning in today. Take care and bye for now.